welcome. If this is your first time tuning in to Tim's Tidbit, welcome. If this is not your first time tuning in to Tim's Tidbit, I still want to say welcome and give you a nice hearty, well, thank you for always tuning in to Tim's Tidbits, hanging out with me and my guy back here over my left shoulder, right there, Spidey, aka Black Spider, aka my road dog, aka whatever you want him to be. If you don't know who I am, my name is Timothy Lee Rogers Sr. I get on Al Gore's internet every single day. 9 a.m. Eastern Time, 6:30 p.m. Eastern Time, to talk about the price action dealing with the S&P 500, the SPY, the ES futures, whatever you want to call the S&P. That's what I talk about. Why? Because I want to help you get your aha moment when it comes to trading, investing, anything dealing with the stock market. Who am I? Just do Fort Lauderdale, Florida that learned to trade. And now I want to help other people learn to trade because it will change your life. Trust me. Am I the best trader in the world? No, I'm not. Here in 2023, I have decided to try my hat, well, put my hat in the ring, try my hand, if you will, at day trading once again. I learned very quickly I was not a day trader. But now that I've honed my skills a little better, I'm going to go back to day trading again. Will day trading punch me in the mouth again and say, you know what, stick to swing trading? We will see. We will see. Now, let's get into the overnight price action. If you do not know, in 2023, I have decided to cut the overnight price action, the price action recap down to 60 minutes. So I am totally ignoring the comments for right now until I do what I need to do, because I need to squeeze into 30 minutes. I have the comments hidden. I can't even see them, but I will look at them when I'm finished. I should not be hearing sounds in my house right now. I'm here by myself. The kids are in school, the collectors at work. I should not be hearing sounds in my house right now. Since y'all keep letting me forget to do this, I'm going to go holler at my friend, Spylene. For those who don't know who Spylene is, wrote a song for it. Want to hear? Here it goes. Sing it with me. Spylene, Spylene, where you at, baby? Yeah, hey, how you doing? Spylene from the Gap Up. You know what? I just remember when I was in the school line with Chris, I got a headline about the non-farm payroll, and I screenshotted it, right? And now I see what the market did with that news. If you remember yesterday, let's go back. This is why I be talking about I never want to be in a trade in front of news. Can somebody, I'm going to look at the chat now. Can somebody please put in the chat what I call the news? It is what? I said it is a what? Somebody put it in the chat for me. This is why I never want to be in a position in front of the news. I say the news is what? It is a what? Michelle Tucker! What's up, Michelle? You hear who too? What the? Oh, yeah. Get learn and share. Good morning to you. The birds are chirping. And the birds are happy they're no longer wet because nobody gonna put in the chat what I say the news is. What I say the news is. Why'd you put my name up there, Tranisha? See, this is why I don't look at the chat. I get sidetracked. What was I talking about? Oh, I know what I was talking about. Yesterday. Remember yesterday, Let's go to Forex Factory because it pulls up faster. Right? Yesterday when the JOLTS numbers came out and no, that's Wednesday. Wednesday when the JOLTS numbers came out, the market didn't like it, right? And the JOLTS numbers were good. They were good numbers, right? I mean, we had more, you know what I'm saying, jobs available than they expected. That was good, right? The market didn't like that. ADP came out, was excelente. The market didn't like that. Unemployment numbers were excelente. The market did not like that, right? The market tanked, right? And here we are today. The non-farm payroll is excelente. And what did the market do? Pay now! It loved it, right? Good news on Wednesday. The market hated it. Good news on Thursday. The market hated it. Good news on today. The market loved it. Loved it. Let's see how much the market loved it. Let's go look at it. I'm going to get to the price action. I'm talking right now. What'd you say here, learn to share? A circus. It is a circus. I say that the news is, what did here to learn to share say? You said it depends on which way they want the market to go because the numbers were good and it went down. That's true. I do say that, but I call it the unknown variable of X. You cannot solve the equation until you know the value of X, and you will not know the value of X until you see which way they want the market to go. Very good. Here to learn and share and cool it now. Hey, watch out. It is a real joke. It is a joke. It's a circus. This is why I don't want to be in a position before we know that variable, that unknown variable of X. What is X? What's X? Now let me hide these comments again. You feel me? Now, let's see how much of a circus it was. Right? Charlie, look at this candle. Look, hey, we even came down and took out the sell side. When did we take out the sell side? When did we take out that sell side? When did we take it out? Take it out. When did we take out that sell side? During that news. Pop, 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 pop. Look at that. Look, will somebody come look at this? Will somebody come look at it? Mind you now, look up here. You see what this says? 1 minute candles. 1 minute candles. This right here is the 8:30 news candle. Let me move that out. Matter of fact, let me fatten up these wicks to make sure that y'all can see these wicks. Make sure you can see these wicks. Make sure you can see these wicks. See that wick on that candle? First off, look at the body of the candle, and then look at the wick on the candle. You know what I'm saying? Look, will somebody come look at this? Will somebody come look at this? Look at that right there. That's a 1 minute candle. Let's see what this candle did peak to trough. And then we're going to get into the price action because it looked like it was a lackluster night. We closed here. Yes, it was. We closed there. We pushed up. We came back down, consolidated, and then take off all the news. That's the overnight price action recap. Thank you. So from peak to trough on this candle right here, put it there so when I move it, it won't move. Get that there. 831 candle. The high is 3873.25. The low is 3802. It took out the sales. Oh, I already said that. It took out the sell side that we had been watching on the weekly sell side to see if it was going to take it out. I mean, we was talking about that. Took it out. A 71.1 minute candle. This is why Y'all hear me say it all the time. Y'all hear me say it all. Shout out ICT. When I was in the student line with Chris, I saw that he started doing a Twitter space and he was talking about why he avoid non-farm payroll. And he was saying the exact same stuff that I be talking about. A lot of the stuff, a lot of the days that I avoid, I give credit to Jason Sweetie and ICT. I give credit to Jason Sweetie because he was the first person who really put me up on game about not trading in front of news, not being in a trade at news. I learned that while under Jason's tutelage, if you will, not being in trades during news, right? That's when I started calling it the unknown variable of X. That's when I started calling it that. ICT put me up on game of certain days that he don't trade, certain week, like on non-fund payroll, he don't trade after Wednesday on non-fund payroll weeks. He don't trade on CPI at all. He said he's learned a way to do it, but he put it out to everybody. Do not trade these days. Do not trade FOMC. Don't trade until after 2 o'clock. You know what I'm saying? He got all this stuff that he say. If you follow his teachings, you'll understand it too. But those are the two people who put me up on game about news, candles, and news, and being weary of that stuff. I always give credit where credit is due. I'm just due for Fort Lauderdale, Florida, man. I learned this stuff through the internet and, you know, through people that I met on the internet. Some people have gone on to become my friends. But, you know what I'm saying? We just out here trying to help each other get to the glory land, reach the new Wakanda. But a 71-point move in 1 freaking minute. 1 minute, right? 1 minute. So, took off, pang out. We took off, pang out. Because when I was listening to ICT, he was like the market went up when he expected it to go down. The market went up because I had already been, y'all saw me yesterday talk about, you know what I'm saying, are we going to get down here to this sell side? I had been talking about getting to that sell side for a couple of days, but we've been dilly-dallying. We've been slowly hitting the sell side. We've been dilly-dallying. Have we been waiting on non-farm payroll to take that sell side and then try to push up? But look where my eyes just led me back to. Look where my eyes just led me back to. Where did non-farm payroll take us? Just forget about the wickety wick. But look at, matter of fact, look at the wickety wick on that one candle. After we went to where? Somebody put it in the chat where we went, right? We went somewhere. What do little Timmy Rogers call this area where I'm circling around the top of this wick here? We went there. Somebody put it in the chat for me, right? And then we went all the way back down and took out the sell side. And then where did we go right back to again? Where do we go? Where did the algos take us? Did somebody put it in the chat? What Kula said? What's the face for here to learn share? Wouldn't this be considered a technical bounce because the market is extremely oversold, even though there was no good news for the bullish thesis? I don't know what a technical bounce is. I'm not going to pretend that I do. Yes, in the middle. That's my vibrato. If you don't know what that was with the tongue, that's my vibrato. In the middle. when we took us, the algo shot up to the middle of the road, came down, took out sell side, and then took us right back to the middle of the road. So it was a whole lot of funking over nothing. But I don't know what a technical bounce is. I ain't going to play like I do know what that is. So I can't say yes or no about the market. Now, the market is, you know, technically oversold because we're in a bear market, and we've been in a bear market for a year. You know what I'm saying? We've been in the bear. Let's address that. Let's go over here. Let's put it on weekly candles. Let's put it on weekly candles. Let's put it on weekly candles, right? This was the high in 2022, right? And we sold off the entire year, right? We sold off the entire year. So in the process, let's go here. Fibonacci, go from the high to the low of the bear market, from the high to the low of the bear market trend, or whatever you want to call it. I can't say bear market rally. What is it? You got rallies and bear market drawdown. I don't know. The bear market trend, right? From the high to the low, from peak to trough, we are sitting right down here. We are technically oversold. We're in a bear market. So in the grand scheme of things, this little bounce is nothing, right? That's on the yearly level. Now, let's go down and look at what we were for. Why is my thing running so slow? What in the haberdasher hemoglobin going on here? Why is it running so slow? Cheese and rice. Thank you. So now, in the short term, we pretty much in the middle of the road, right? In the short term, we're in the middle of the road. Long term, we're extremely oversold. Short term, we're in the middle of the road right there, because this is the range that we got in sync with the algorithms. This is the range that the algorithms have been dealing in since September the 13th. So from September the 13th up until January the 6th, right, the algos have been dealing in this dealing range right here. Well, Tim, how do you know the algorithm's been dealing in that dealing range since then? Glad you asked that question, little Timmy Rogers, because on September 13th, this was the high that we made, right? We sold off, came all the way down, and this is the low that we made on October 13th, right? If you run the fib from that high to that low, this is the equilibrium of this leg down. So from this day, September 13th, to this day, October 13th, that was the major move, this major last down move of the bear market drop. This was the major last, this whole leg was the major last down move. This is equilibrium, right? So when we came back to that area, we consolidated. It was a sloppy consolidation, right? We consolidated there for that many days. And then we left there, pow, took off, right? Took off, left a fair value gap. You know what I'm saying? Did not fill that fair value gap until we went up and handled some other business. What was the other business? Got above this rejection block inside this dealing range. That rejection block did its job and pushed us where? Right back down to equilibrium, right back to the middle of the road. So this is why little Timmy Rogers says from September 13th all the way up until now, this is the dealing range that the algos have been playing with, this same range, because we're still consolidating right at equilibrium. When we did it back here, then we started doing it over here. We are consolidating right there at equilibrium, waiting for a catalyst to push us up or down. What you say, Sanjay? What's good, gang? Tim, I've been looking for the join button. I don't see it. Not sure if it's because I'm on my phone. Oh, yeah, you can't see them on the phone. It don't show on the phone. If you want to join, Sanjay, it ain't necessary. But if you want to join and you on your phone, you're gonna have to actually look in the description and click the link that say join. The join button don't show on your phone. You got to go to the description in the link and click the link. Let me do what the experts tell me I'm supposed to do. Hi, If you like the content you're seeing so far, please consider subscribing. Press the subscribe button. Even press the like button. It helps us out and it helps the channel to grow. We're on a mission to get to 2,500 subscribers. We wanted to get there back on my birthday on August the 6th, but we didn't get there. But I still have faith that we can make it. If you like the content you're seeing, please hit the subscribe button and also hit the like button. It lets the algos know that you're enjoying the content and it shares it with other viewers just like yourself. And then maybe they'll like the content too and they'll subscribe. If you really like the content, please share it with other cousins like yourself and say, hey, I really enjoy the content that Tim does. You'll enjoy it too. Go subscribe. Thank you. Now, back to what you were saying, Sanjay. If you look at the description, there should be a link that says join in any of the live videos that we do. You did it. Let me hit the like button on my own thing. Y'all hit the like button for me. If you hit this right here, it says join this channel to gain access. That first link right there. If you click that, it'll take you to the is right there. It'll open up this right here. And it have the different levels you can pick. Right? It has the different levels that you can pick. And the they got the description down there of what each level entails. That is that. Oh, let me also, before we get out of here, oh, Michelle got some game that I didn't know. Sanjay, on your phone, you should be able to click on the little down arrow that's on the same screen where you can like the video. Did not know that. Did not know that. Let me go try that myself so that I can tell people that. Thank you, Michelle Taco. I appreciate you. Did not know that. I don't want to connect to my TV. Tell people that. Thank you, Michelle Taco. That's what I be sounding like. Oh my goodness. Okay. I see a like button. I see a like button. I see a share button. I see a clip, save, report. I don't see that on my phone. It don't look like that on the iPhone. I appreciate you. Yeah. I don't see that on. It ain't on my phone like that. I'm sorry. My phone, only thing on my phone, when I click it, I just have to go to the links. I have to go to the link and then ask me to open it up in like Safari or Google Chrome, like that right there. That's how it shows up on my phone. Like if I do it, if I don't have y'all can't see that. I don't know why I'm wasting my time. I have to come down there and I have to hit the little link. When I hit the link, it says open it up in Safari. Then it opens up the join thing right there. Then the join button shows up. I don't know. I'm sorry. I'm tired of thinking about it now. Shout out Tranisha for the super chat. The super chats aren't necessary. The joining the membership isn't necessary, but I appreciate it. Showing your support for the channel. Shout out to Tranisha, been here from the beginning. You hear me? From the beginning. Y'all already know. Y'all true blue. Y'all been here from the beginning. Y'all already know what it is, man. Y'all already know what it is. Yeah. Yeah. Michelle must be got one of them funny phones. It's a V, not an arrow above the save button. You must got a funny phone, Michelle. You ain't got no iPhone. It ain't nothing on there. Nah, I done hit the save button, messing around with Michelle. I saved that. Save to. Get out of there. What? Now Michelle got me doing something wrong. Oh my God, I'm distracted now. I have an iPhone 2. An iPhone 2? You better stop playing with me. Do you mean TOO? Kevo, no, I can't apply it to the 4. Didn't I tell you in the video to go back and do it on any time frame? Hey, Kevo left a comment and said, hey, this was nice. Can you apply it to a 4-hour or a 15-minute? No, I can't. I said in the video, just do the same thing on any time frame. Okay, let's go in. Drop down to 4-hour. Drop down to 4-hour. Drop down to 4-hour. Go to the 4-hour time frame, right? We've been in a bunch of chop slop. So the more chop slop you be in, like the, you know what I'm saying, the harder it is it's going to be to figure it out. But let's just say we're looking at like all this consolidation all up and through here, right? Just says consolidating all up and through here. So we're trying to figure out the range on where it's in between like that, right? Right? So we just run it. Let me unclick this right here. All you do is just grab it and pull it. And when your 50% gets to the consolidation, boom, we're in the consolidation area. When a 50% get to the consolidation, you look around and say, okay, where does it, and you can do it from the high or the low. Where does it make most sense? Where's the nearest low? Right here, right there. So boom, that's the equilibrium where we consolidating through that whole range from this low to this high. And then you look at it and say, okay, does that make sense? Let's see, does it make sense? We was over here, we was trading, right? We got right here. We came down, we broke sell side liquidity. We came down, broke sell side liquidity, right? We had this this sell side imbalance, like shout out ICT, you know what I'm saying? He be talking about the SIBIs and the BISIs and all that right there. This fair value gap, this long humongous candle. This is a sell side imbalance right there. Fair value gap right there. You know, he always be talking about those. When we came back in and we repriced that area, now this whole area right here, we can tell from this consolidation and all of that, that this is a, you know, technically going to be a balanced price range, right? Once we balance that price range, what do? We took off and we leave a gap, right? So once we get that balanced price range and we leave that area, you know what I'm saying, with some force, with some oomph, you know what I'm saying, we be expecting this gap to stay open until the market goes and handle other business. So, right? So now you could technically, right, just say if you couldn't see out there, right? Remember when we was on live together and I was like, hey, let's reverse engineer this. And we started doing what, you know, I was like the fib extent, the fib projection where we would get the fib, right? We looking at this low right here. We saw we take off. We saw we took off and we started consolidating right here. So we would take the fib from where we took off from and then push it up until the until we got to the equilibrium, right? Until we got to the area where it was consolidating, and we would just say we're gonna put it like at the middle, right? Because we consolidated here, we consolidated there, we consolidated there, right? So we're gonna go split the difference. We're gonna go right through the difference, right? Go in there. Let's just anchor it to a nice little open candle right there. We got a nice little open candle that's kind of beefy and took off. It's coming across, you know, touching pretty much a good spot, right? So then we'd be like, okay, we can expect price to go to at least 42.16 because we're using our field projection where we think it's going to go based off the consolidation, right? And then we start just waited. And look at there. We came very close to that, right? Right there. We came very close. And where did we actually go? Boop, right there. Because it was, you know, it was there, and they was right on the bottom of that there. They was on riding across the bottom of those there. You know what I'm saying? So we came very close to it with our field projection, but it's still the same thing. We just reverse engineered it when you can't see it, but once you can already see it, you just look at the consolidation, look at the high above it, look, and then start from the high above it, or look at the low below it, start at that low and push it up like that until you hit that equilibrium. Once you get to the equilibrium, you be like, oh, okay, that's the high that makes the most sense right there. And that's how you get in sync with the algos. And I'm not going to do it on any other time frames. It's the same thing, Kelvo. Okay. Okay, with your iPhone 2. Hey, man. The market is open. The market is open. The market is open. If you're going to go trade, please trade safe. If you're not going to trade, please take copious notes. I will actually talk through the overnight price action, even though 30 minutes is up. I will sit down and talk through it. And while I talk through it, we're going to take advantage of looking at the IDR, the DR IDR, right? We're going to take advantage of looking at the DR and the IDR, right? So on the Dow gains more than 200 points after jobs report showed lighter wage gains than expected. What? They ain't show no lighter wage gains. Hold up. That's why I took a screenshot. I took a screenshot and I sent it to my what's the name. Let me go to my Dropbox. They trying to snow me. Or let me see if I read it wrong. Let me see if I read it wrong or if they trying to snow me. Get out of here, Dropbox. NFP news. Non-farm payroll rose 223,000 in December as strong job market tops expectations. Let me screenshot this right here that just popped up on my phone. Freaking liars. This is why I tell you, don't trust the freaking headlines. They are trying to deceive you. NFP News 2, like Michelle Tucker iPhone. Save. Right? Peepity peep peep peep. Ignore that. Dow gains more than 200 points after job report showed lighter wage gains than expected. Come the freak on. At 9:31, no, go back. At 8:31, as soon as the news dropped, as soon as the news came out and the algos went crazy to the upside, Jeff Cox, ignore the last name, said that a strong job market topped expectations. 1 minute after the news dropped and the algos went crazy with that upside. I'm sorry. Then Cameron, however you say that last name, and Sarah Min came out an hour later. Who's lying to us? Because they came out an hour later and said the Dow gained 200 points after job report showed lighter gains than expected. So were the gains lighter or were the gains strong? Because it said it was a strong job market, tops expectation. Strong and tops. That means it was good and it outdid what you expected. It was strong, it was good, and it tops or outdid what you expected. And then you go back an hour later and try to pull the woolly cloth over my eyes and say, oh, it went up because the job report shows lighter wage gains because the feds don't want us to make more money, so they this is why you get out of here. You don't know nothing, right? It is a stronger market in terms of job gain, but wages were lower. Okay. Wages were lower. They said it gained because the wages were lower, but they said it gained because it was stronger than expected. Man, forget them what's the names? Forget those headlines. They try to hit you with the flim flam. I got to go to Econo Day. What was I doing? I was going to wrong thing. I was going to go look at the overnight price action. Unemployment went down. Non-farm payroll month over month. 23 consensus, 22. Private payroll month over month. Top the range. Manufacturing payroll. Manufacturing payroll month over month. 8,000. Consensus 10,000. Probably revised. So no change. No change in that. Participation rate about the same. Hourly average earnings tick down a little bit. Yep, tick down a little bit. Average hourly earnings tick down a little bit. Yes. So the average hourly earnings and the average, so month over month, year over year, the average hourly earnings ticked down slightly from the last time, but it was well within the range. It was in the middle of the range. Yeah, it was well below the range. I'm sorry. They had the range between this and that. But it ticked down slightly from the last time. Yes, it ticked down slightly from the last time. So yes, so it ticked down slightly. So here we go. Now, inside the non-farm payroll, we got a mixed bag of tricks. We got a mixed bag of tricks. Now, again, earlier this week, right? The market was going down on the good news. So, which one of these pushed the market up? The good news of the strong market or the bad news of people getting paid less? Did it go, since the Fed want us to not make as much, but still have a strong job market? Will it be a combination of both? Shout out Sanjay for popping in, joining us. Welcome to the gang. You got the Meta employees getting laid off from $1 million salary and moving to industrial and healthcare for like $250 a year. So wages are coming down. Hey, you're getting paid less money. You're getting paid less money. Wages gonna come down. But yeah, which one is making us pop? Which one is making us pop? The good news or the bad news? The good news or the bad news? Which one is making us pop? Again, this is why I don't like to be in a trade before, and I still don't trust the headlines, because you giving me, like, if shout out Cool It. Shout out Cool It, right? If Cool It wouldn't have said the wages are lower, right? I wouldn't have came in here today and actually looked at the numbers right there. Because I used to come in and look at the numbers, but you know, I've been all over the place today. So I didn't actually come in and look at the numbers. So I wouldn't have even known that it was a like good and bad in the report outside of what the headlines told me. You know what I'm saying? Hey, we went up because it was good news. Hey, we went up because it was bad news. That's pretty much what the headline said, right? Strong market. We took off. Hour later. We getting paid less. We took off. You know what I'm saying? So, but this is bad news. This is good news. Which one took us up? I'm assuming the bad news took us up. Why are you assuming that, Tim? Because earlier this week, every time we got good news, the market went down. So now, is this bad news strong enough to keep us up above this good news? Is the market going to react to the good news and then react to the bad news later? I mean, react to the bad news and then react to the good news later and bring us back down? Like it's been reacting to the good news all week and bringing us down? I don't know. Who's lying to me now? Oh yeah, I'm supposed to be looking at the price action. Let's do that. Let's do that. So in the Asian/Sydney session, right? We closed over here. We closed over here at 389. I mean 38.29 even on the New York close. Then we pushed up, pushed back up, and then started to consolidate here around. Oh, that's right after the so around 7:30, consolidated a little bit, pushed up again, traded back down into this 5-minute fair value gap, and then took off again. Right, got a confirmation to the upside on the Asian DR at 8:30. Right, pushed up into this 5-minute fair value gap over here. I'm not sure what it looked like on a higher time frame, but we just see it traded up into a 5-minute fair value gap there, consolidated, then pulled back down into the 5-minute fair value gap with the DR IDR. If you would have taken that long, right, at equilibrium of that fair value gap, which would have been pretty much at the DR high, 41, you would not have gotten 10 points out of it, and you would have gotten your head bust if you would have taken that long off of the DR confirmation to the upside. Right, you would have got your head busted to the white meat. So then we took out short-term sell side, went up quickly, took out short-term buy side, and then sold off heavily, approaching the London. Right, so at 2 o'clock, we took out short-term buy side, sold off heavily, approaching the London, traded down into boop right there. We got a 5-minute order block over here. We traded down into, popped back up, came into this 5-minute order block right there. First we wicked up to the order block, came back down, took out these equal highs there, wicked up to the order block, took out the weekly highs, came down, and then went back up with some authority to the order block again, and just kind of consolidated in the top of the what eventually became the DR IDR range. Came down, got a confirmation to the downside, on the 410 candle. That'll be the 415 candle on Ninja Trader. Got very close to, is that yesterday's low? Let's see. Yes. Got very close to yesterday's low, but did not take out the sell side. Right? Came down, did not take out the sell side. Immediately went back up to a 5-minute fair value gap inside the DR IDR range. If you would have taken the short off of that down confirmation on this retrace back up to this fair value gap above the equilibrium of the IDR DR range, say you went at 50% of the fair value gap, then let me see, 38, 33. So you need 23 for a 10-point trade, and you would have gotten that just prior to non-farm payroll inside the London. So the DR IDR, you would have got your head bust to the white meat following the DR, taking a trade off the DR IDR in the Asian session, going into just before the London, and then you would have had a 10-point successful trade on a breaking market structure fair value gap retrace, right? It's not my breaking market structure. It's not my liquidity run reversal setup, but it is a ICT 2022 mentorship setup, and it would have yielded at least 10 points. So that's a successful trade in my book. Now it looks like we're consolidating in this rim right here. 9:30. So at the open, pushing back down, we got a 5-minute fair value gap right here that we came down and touched one time already. We came down and touched it, wicked off of it, eventually pushed up all the way up to, did not take out the high. Felt that it stopped, poked above these equal highs on the 5-minute, but stopped. Oh, this delayed. So I don't know why I'm looking at this. This information is delayed. Yeah, we way down there. Can this be the bad news taking us? I mean, the good news taking us back down? Okay, we coming down. Oh, we retracing this fair value gap there. We got an order block right there. So we got an order block right there, and we come back down, filling this fair value gap. Look at this on 5-minute real quick. 5-minute fair value gap. We got a breaking market structure here to the downside. God dog it. See, when we got runs this big, I don't like when we get runs this big, because it creates it puts me in a bind. I'm in a bind, Nate. Puts me in a bind. And then the stop would go way down here. That's too far. That's too far for me to even mess with that. Because on the 5-minute, the stop would need to be way down here at the bottom of this weight. Let's look at the 1 minute to see, because this right here, see, we got a breaking market structure here. And then we came down, then we got a fair value gap there and a fair value gap there. So we got two fair value gaps. After we left this area right here, we got two fair value gaps to the downside. And see, this was like a news candle. So that's like not real price action to me. And then we hit, you see, now we're back in the discount. So this is the area where Lil Timmy Rogers going to be looking to buy. But And see right here, this would have been my buy right there if my risk tolerance would allow me to put it down there, which it don't. That's 30 freaking points. That's a 30 freaking point risk to red. Nah. Let's go down to 1 minute and see what it looked like inside here. And see, it's still, even on the 1 minute, it's still way down there. Can't mess with it. Can't mess with it. Can't mess with it. And then here, this would be the entry, but I can only trust it back up to this area right there. Would that be 10 points? Even though I already missed it, 30. Yeah, that would have been at least 10 points. That would have been at least 10 points, but I couldn't risk it. Even though that's my trade setup, but it's coming off of a news candle. You see what I'm saying? That's my trade setup, but it's coming off of a news candle right here. So all of this, that's just unreal to me. Then we went up and we consolidated. Now it's more of real price action coming down than it is of going up. Right? This is real price action coming down, but this is not my setup coming down. Right? This is my setup going up, but it's based off news, and I would have to put my stop all the way down here. So that's not my trade. I can't take it, even though 31. That was 10 points already. That would have been a 10-point trade already. Tomato. But I missed it anyway. I was looking at something else. I wouldn't have took it anyhow. I don't take it because of the risk to reward. Couldn't take that. What was I saying? The bad news, higher wages, wage price spiral, which is inflationary. Yep. That's what I was saying. I'm assuming the bad news took us up because good news been bringing us down. So what do you do? Nah. Reversal happening as we speak. You miss your trade. Nah, it wasn't. I couldn't take it. I actually just said it. I couldn't take it. I couldn't take it because it was because of this news candle right here. Like, see, if we didn't have this news candle, there, like my entry gonna be. Let me see exactly what my entry would have been. I always like to take it off of 50% of the fair value gap. Don't ask me why. That's just what I like to do. So 33, right? 33 would have been my entry, right? And see that, like, and this is on a 1 minute. Like, because of this news candle, I can't even get no respectable place to put my stop. You see what I'm saying? I don't have anything to tuck my stop behind. Like, this order block is more than 8 points away. You know what I'm saying? From 33, what is that? 25. From 33, what is that? 25, 8 points. So it would be like just above the order block. Or is it the open of the order block? Yes, the open of the order block is where my stop will have to go. I don't want to put my stop at the open of an order block when it's a bullish order block. I would want to put it at least on the close of the bullish order block because it's tucked behind the order block, right? So I nowhere to I couldn't take it. It's outside my risk tolerance. That is my trade setup, but it's outside my risk tolerance, so I can't take the trade. That's the first thing I said. I was like, this would be my trade, but I can't take it because of this long wick. Then I went down to the 1 minute to see if it was something possible, and it still wasn't. It still wasn't. And then this over here, this right here is an ICT. This is an ICT model. We got the break-in market structure, and we got like 1, 2, 3 fair value gaps for you to pick from which one you're gonna take. But this is not my setup, because my setup, this candle right here would have need to broke the market structure. So since we broke it in 1, 2, 3 candles, that's not the liquidity run reversal. I need this, like for mine, I need the breaking market structure to come off of that one candle, and then the like this should have broke it, and this candle right here should have, like how it made a fair value gap there, this candle break it, that candle make the fair value gap. That'll be my trade setup. Just like this candle break it, that candle make the fair value gap right there. Like now this right here, again to the long side, right, was my trade, but the stop way down there. The same way when we came back here to the same fair value gap, the stop way down there. So both of them look like, oh, Tim, you missed your trade. It's my trade setup, but it's not my trade. Hopefully I was able to clarify that for anybody who may be struggling, like when to take a trade and when not to take a trade, if it's your setup. You know what I'm saying? Like, and one thing that I struggle with, when I initially first started trying to day trade, I struggle with it being my setup and then me not taking it because of the risk to reward, and then later regretting it when it reacted to the exact place that I would have entered. Like this right here, I'm saying this, and when I say exact place, I ain't meaning like to the tick, but you know what I'm saying? For me, entering here, it would have been a profitable trade because I wouldn't have got stopped out. It didn't come down to 25. So I wouldn't have gotten stopped out. And then it would have given me my 10 points. And then I would get mad and be like, man, so the next time I would try it, and then it would come down and stop me out and bust me in the head. And I would have this back and forth, back and forth, back and forth. And so I had to learn how to say, stick to your rules no matter what. Because if I break a rule and it stopped me out, then I'm mad at myself because I did something stupid. I broke a rule and got stopped out. But if I stick to my rules and then I get stopped out from sticking to my rules, no harm, no foul. That's why we got risk tolerance. That's why we got risk management. You know what I'm saying? But like if I would have jumped into this trade, the worst thing that I ever did was break a rule and it yield me what I wanted, because now I'm in bad habits. You know what I'm saying? It don't matter if this is outside your risk tolerance. Take the trade. That's your setup. That's what the, you know what I'm saying, the little bad boy on my shoulder is saying. You know what I'm saying? Until I jump out there and it don't work. You know what I'm saying? Until I jump out there and it don't work. Now I'm just bust all the way in the head. And see, I'm glad I'm still talking on here. This is what I was talking about the other day. Well, yesterday, actually, when I was like, I like to mark up my chart so I don't get lost in the lower time frames. Like I'm sitting here now, right? I'm sitting here now and I'm seeing a setup right here, right? And what makes this a potential setup right here, right? You like, Tim, what make that a setup, right? I'm glad you asked that, right? If we look over here, right there, right? We got this fair value gap right there, right? A fair value gap is an area of what? Liquidity, right? So what do? We dipped into the liquidity pool, right? We we came down into a liquidity pool. We set a swing high right there. Did we have some news just come out? What just happened? Did we have some news just come out? We set a swing high right there, right? And then we broke that swing high with one move. Set a fair value gap there. So now I'll be looking at this right here as a possible entry. But we are on a 1 minute time frame right now. And I don't have any other thing marked up from the higher time frames. You know what I'm saying? I don't have anything marked up from the higher time frames. So I'll be in this lower time frame and I will be like, oh man, this is my setup. Boom. Take the long. I take the long, not knowing from a higher time frame, we actually then took some buy side, and now we're coming back down to another place. And I'm trying to go long right here, trying to figure out why am I getting busted in the head? You know what I'm saying? When it started going against me, because it's like I started my analysis from skinny mini. I started my analysis from the 1 minute, right? This is a 1 minute fair value gap that we traded down into, you know what I'm saying? And then it could very well be a good trade that you take and it take off, but without my higher time frame analysis, right? A lot of times in the past, I would get busted in the head just going long right here without, you know what I'm saying, having my stuff marked up on my charts, without having like the bias from the higher time frames. That's what I was talking about the other day. When I be like, I like to have my chart with the marks on there so I understand where I am, so I don't get lost in the matrix, so I don't get turned around in inception. Yes, news. Okay, news. What was the news? Yeah, what was the news? Let's go see what the news was. Oh, factory orders and ISM manufacturing. Service index. See, this is why I was saying, like, I could see it on the layout better here, but it takes a long time for the information to open up. I probably can go to Forex Factory and I type right and go there now. It's still spinning, still spinning. I go to Forex Factory. Okay, so ISM numbers are down. Again, bad news, taking us up. ISM numbers are down. Right. No, that's good. PMI, they pay it. Oh, let me see. Let me check it. Let me check it. Let me check it. Yeah, it's below 50. So that's bad. That's bad. That's what I was thinking. Below 50 is bad because I remember some of them, like if it's above 50, it shows expansion. If it's below 50, it's showing contraction, right? So above 50 indicates industry expansion. Below indicates contraction. So contraction, that mean the growth is slowing down. So it's not growing. If we're not growing, then that's bad news to little Timmy Rogers. But right now, they want us to slow down. So the bad news is taking us up. Yes, there it is. Factory orders month over month down 1.8%. Contains a revision of durable good order data released about a week earlier and fresh data regarding non-durable goods. So it's down 1.8%, down a lot more than expected. They expected it to be down close to 1%, and it was down close to 2%. And this is still, oh, it finally came through. It finally came through. Ain't that a shame? So in 1 minute, we went back up to the fair value gap. We didn't hit the first one after leaving the balanced price range. We didn't hit the first one. We came to the second one and we pushed back down. Again, the price action coming down was like more real. But let's see how it plays out. Let's go back up. See if we're going. Yes. Economy slowing growth, and that's what they want. Yeah, the 1 minute be having a lot of setups. It'd be a lot of setups on the 1 minute, but it's like I say, you want to have, like I want to have the higher time frame reference point, so I don't get lost. I don't get lost in the sauce. I don't get stuck on the wrong side of the trade. I don't get stuck on the wrong side. That happened to me the other night when I was taking the trade. Then I realized quickly I was on the wrong side of the trade, and I got out. I did a little talk through of the trade, and I posted it for the Black Spider members. I did a talk through of it when I was I figured out I was on the wrong side of the trade, and I got gone once I figured it out. This is why ICT was on live today. Yeah, I'll talk about that earlier. I had tapped into his Twitter space when he was talking about that. Appreciate that, Michelle. I tapped into his Twitter space, and he was talking about non-farm payroll. He was talking about having a long weekend. He'll like just have the first week of every month, just have a long weekend. Don't trade after Wednesday the first week of every month, because he always preached that. Don't trade after Wednesday. New York morning on Wednesday is the last time you should be looking for a trade on non-farm payroll week. He be calling it not for professionals. He said he don't know where he got that from. He can't remember who he got that from. But instead of non-farm payroll, he called it not for professionals. Not for professional traders. Hey man, this look like it's gonna be chop slop. I'm about to run to the store to buy some milk so I can eat me some cereal. My hand is hurting right here from when I was out there in the yard. For anybody who cares, I got a split on my hand. You can't see it. It sounds like I'm being a little boo-boo crybaby. Sound like I'm being a little boo-boo crybaby, but it's like a cut on my hand right here from like grabbing on the thing, trying to, like, it's like a tool. It's shaped like a C. Let me show y'all. Y'all stay here. I got to share this with y'all. Stay right here. So, y'all, story time. Y'all know yesterday I was telling y'all about I had Lake Erie in my yard, right? I had Lake Erie in my yard, right? So, when we dug under the ground, this is a little pipe that we end up cutting off, right? When we dug under the ground, this was connected into the regulator, right? This was connected into the regulator, and they had like there was a piece like this in the regulator, and then on the end of this there was a plastic shark clamp. Some people call them gator bites. Some people in the package say shark bites, but the gator bite, he said it was a gator bite. It was made out of plastic. It was on the end of this, and then the gator bite was connected to the end of this pipe, and then another one, like this is a gator bite on the end of this right here, and it was screwed into the regulator, right? So water is like spewing from right. This is where the water coming from, right? So we break the plastic gator bite off. We go to the store, show them tell them what we need, right? So they give us this gator bite, this shark bite. It's called the shark bite with the threads to go back into the regulator, and then they give us a shark bite like this right here, a shark bite like this to go on the other end of you know what I'm saying. It'll be like this right here. It'll look like that when we finish, right? Because the pipe, we'll have it on this end of the pipe, and then it'll be connected right there, right? Well, no, we didn't have this right here first. We just had this, right? We just had this. We put it in there, we put it on there, and we turned the water on, the water spewing out, right? So we turned it back off and started rubbing up under the pipe, seeing what's going on. A root had grown up through the pipe. This is where the leak was coming from the whole time. It looked like it was coming from the plastic gator bite, because when you moved it, it was all wiggly. It may have been broken. The gator bite might, because it was spewing out the gator bite, right? So it may have been broken, but this was the ultimate, this was the real culprit. A root had grown up through that, right? If you see the little dent, you can see how the root started growing, and then it actually just grew through it, right? So now, can't get this off, right? We don't put the shark bite on here. Can't get this off. Like, impossible. Can't get it off, right? This right here costs $10 and some change for one, right? This costs $10 and some change, right? So I bought this right here, and I had one of these and one of these. So because I spent $20, right? Right? No. First time I spent like $10. Either bought this and this, can't remember. Went back to the store to buy another one of these, right? So we bought another one of these, and we got we cut this off. So we bought another. Yeah, so the first time we just bought this. So we went back to the store, bought another one of these, right? And we bought one of these, and we bought a little piece of pipe like this right here. So he cut off the pipe, you know what I'm saying? So we clamped it all together. We clamped everything together in the store, so it looked like this, right? So we got to come back and just clamp this to the end of the pipe that's coming out the ground, and then screw this back in, right? So we got the size that we need and everything connected together. Come back, clamp it onto the thing. When we clamp it onto the thing, we that much short, because when it slide into the shark bite, it slid in, and now, mind you, now this is metal, so you ain't got no room to play. You like, if you put it on there, you can't stretch it, you can't move, you can't stretch it. And once this bite, it bite. You can't get it back off. So we're short. So we go back to the store. I say, man, let's go back to the stove, right? It's trip number 3. Let's go back to the stove. We know what's wrong. We know the hole was the problem. Let's go back to the stove. I'm just going to buy what we need. We're going to buy another one of these, another piece of pipe, and another one of these, right? Because we actually damaged this one trying to get it to fit on. We damaged it and tore it all up, trying to get it to fit on. Go back to the store. When I walk in, I say, look here, bro. Let me get this whole setup again. I need another one of these, a piece of pipe, and another one of these right here. You know what I'm saying? But I just need it to be, a little bit longer. And if I got to cut some pipe off at the house to get it to fit, that'll be fine. He says, why don't you just take that off? I said, man, I can't take it off. Once they own, they own. He said, all you need is the little tool. Just get the little tool and slip it off. I said, what tool? This man go out there and get a $2 tool. This is the tool right here. $2 for this right here. And then he didn't even charge me for this. He pulled the tool out the pack, right? He put it on the little thing. He slipped it on the little bar like this right here, right? Pressed it up against it. He grabbed one side. I grabbed one side. We snatched it apart. And then you can reuse these. If you take it off with the tool, all you got to do is just pop it back on again. So I never had to be buying these over and over and over. All it took was a $2 tool, right? So once I figured that out, I was like, okay, I'm Gucci. I broke this one. I chewed up the inside, so I can't use it. Just give me one. It was this one. Just give me this, and I bought the last one. He was like, I'm giving you the last one, right? We come back, do everything we supposed to do, and then that's when we figured out we were short. So let's go to Summerland Plumbing, because I bought the last one from the store. So we get to Summerland. We go to Summerland. The dude at Summerland sell me the tool for $2, right? And then he sell me a piece of PVC pipe. I said, wait a minute. I could use PVC pipe? He'll like, yeah, because you just connected it to that. He'll like, you put the gator clamp on the PVC pipe, right? You take your gator clamp, put it on the PVC. I say, so that's going to hold on the PVC? He was like, yeah. Man, I got a PVC pipe cutter right here. Man, give me 20 foot of PVC pipe. So if I mess up, I can just slip this off and keep cutting to my heart's content. When I tell you, it was, oh my God. All I need, this was a digging the hole is what would have taken the longest time. All I needed was this right here, and a piece of PVC pipe. That's all I needed. Because with this right here, I could have slipped the old gator clamp off, but they was plastic. Well, this was metal. So I could have slipped this off, right? So I could have slipped that off, got my PVC pipe, put this on one end of the PVC pipe, put the PVC pipe into the other metal one that was in the ground, and then connect it to the other end of the whatever they call this pipe. Like it ain't copper. I don't know what it is. It may be copper, but whatever they call this pipe here, all I needed was this. All I needed was this and a piece of PVC pipe. Well, this tool, this, and a piece of PVC pipe. And so I bought 2 of these because there's one in the ground now. So that's 10, 20, 30, right? 40 is one in the ground. So that's 10, 20, 10, 20, 30, 40. Well, so 10, 20, 30, $40 on the connectors. Then I bought the tool, then I bought the PVC pipe, right? So just say $50, $60 on parts when it could have been $12. But count the PVC pipe, it could have been $15. Because when the piece of PVC pipe he gave me, it was like $2. Because he gave me a piece of PVC pipe about this long. It could have been $14 as opposed to $55, $60 in parts. But now I know. Exactly. $100 later. And then my homeboy daddy was the one that was helping me out. So I put some money in his pocket. Because he was the one helping me out. Because, you know what I'm saying, I ain't got no knowledge of this. And you know what I'm saying? And he, you know what I'm saying, he an old head, a handyman. He know how to, he know how to do the work. But he, you know what I'm saying, he may not know all the little nuances that go into every little thing. But he know, you know what I'm saying, he know, hey, you need some shark bites. He called them gator bites. You need some gator bites. You know what I'm saying? It's only a 5-minute job. Get you some gator bites. You get you another piece of pipe. Did it? And he ain't lie about that. A 5-minute job. If you don't mess up. Because once we got what we needed, it literally took me, matter of fact, while he was going to the car to get the shovel, because when we left, we put the stuff in the trunk to go get my tool bag, his shovel, and his water pipe key. By the time he walked to the trunk to get that, I had to put this all together and was wrapping the thread tape around this right here and just needed him to, you know what I'm saying, help me align it up. Because he had been down in the hole so long, I was like, man, I ain't going to have you down in the hole. I get down there and mess with it. You know what I'm saying? Because he older than me. I was like, I get down there. He was like, nah, I got you, boss. I got you. You know, I was like, man, I get down there. And plus, you know what I'm saying? I ain't no super strong dude, but I'm stronger than him. And taking these things apart, you know what I'm saying? If you ain't got the right angle on it, man, it'll put a hole in your head now. It'll put a hole in your head. Some like with the PVC, I can do it a little bit easier because I can grip it. But this metal right here, be to cut my finger. But it like you just press it up against that little thing and it'll let it go. Anyway, man, story time over. I appreciate y'all for hanging out for story time. Oh, we done pushed back to the middle of the road. Look at that. We done came back to the middle of the road. Right there. And again, this liquidity run reversal right here with an extreme stop loss requirement actually turned out to be the move. But again, I couldn't take that because it's outside my risk tolerance. And back in the day, this kind of stuff right here used to drive me crazy. I'll be like, that was my trade. I was going to enter right here on 33. I was going to take it on 33 right there. Right. My stop would have been down here on 25. It never came to stop me out. I could have had, what's this right here? From 33 up to the middle of the road, 72. Let's just go to 73. So it'll be an easy 40 points. Easy 40 points. That stuff would drive me crazy. It would drive me. Oh my God. A 40-point trade. I didn't take a 40-point trade because I was too scared. I was scared. I had to put my stop down here. But look what you're risking. Excuse me. Let's see what we're risking for that 40-point trade. Let's see what we're risking for that 40-point trade. Right? The low on this candle is 38.02. I usually like to give it at least a point. So let's say 38.01. Right? So 38.33 was the entry. 38.33 minus 38.01. 32. You're risking 32 points to get 40. That's still a positive risk to reward. So, hey, it's a positive. At least it's a positive risk to reward. So I can't really be mad at that. It's a positive risk to reward, but that's way outside. I'm not risking 32 points. I'm not risking 32 points. It is a positive risk to reward. 40 divided by 32. It's a 1.25. It is a positive risk to reward. That's just like my risking 8 to make 10. You know what I'm saying? That's my risking 8 to make 10. That's my scalping. That's my scalping setup. I risk 8 to make 10. You know what I'm saying? It's a positive risk to reward. Long as I mitigate my loss, I can be profitable because it's a positive risk to reward. If I win, you know what I'm saying? If I get to the point where I trust my system, where I know I can win more times than fail, I've got a positive risk to reward. So I'm going to be profitable. Long as I don't overtrade, long as I wait for the right setups, I'll be profitable, even though I take losses because it's a positive risk to reward. Right? So I can't, that's my scalping ratio, 1.25. Right? But I'm not risking 32 points. I'm sorry. Can't help you. I appreciate y'all for hanging out with me. Hopefully I said something to enlighten somebody. Hopefully y'all enjoyed my story time. For anybody, if you ever have to go dig up something in your front yard and you see it may be made out of metal or plastic, but if you see something on the pipe with like a weird little plastic connection, it's called shark bite. This is just an adapter to put pipe to pipe like that. Pause. And then this is like the end that screws into something and then it connects it to a pipe. If you ever run into this in the ground and you have a hole or leak in your pipe, only thing you need to do to get this off is this little, it's called it's something removal. I looked at the name yesterday. No, it wasn't removal. It was I can't think of the name of it. But only thing you do, you slip it on there. You slip the tool on the pipe, and then you slide it back against that little plastic, and then you pop them loose, and you can reuse that. You don't have to go and buy this unless it's bad. And then once you take that off, you're gonna need something like this. Once you cut the pipe to connect the pipe to the pipe, and they slide on so easy. Like when you get the right thing, taking it off is a beast. But when you just line it up and you just line it up like that right there, and you push it down. Or this one, this the broke one. We broke this one. Yeah, I forgot. This the broke one, right? You line it up. If you like we broke this one, but it's a little plastic thing on the inside. That little plastic piece got to go down inside the pipe right there, like that right there. But we broke this one. But once you get it lined up properly, you'll just slide it together and it goes in with no problem. Like that. See, you put it on there. Whoop, that's it. Now it's together. And I cannot take this back apart. This ain't coming off. No matter how much I pull, that gator bite, once that shark bite get on there, it ain't coming apart. It ain't coming back off. That's all you need. And then you just connect it back to the pipe in the ground and you'll be good. Right? You'll be good. Appreciate the insight, include a story time as I'm in my yard all the time. Yeah. And see, when I see that, I just took it off with the little tool. You see that? With the little tool, I just took it right off. And I could not pull them apart. When I put that on there like that, I could not pull them apart. But with that little tool, I just see, put it back on there. I cannot pull this thing. That ain't coming off of there. That ain't coming off of there. Well, when you put that little tool on there, I probably pushed it on too far now. But you can feel it when it releases. Just like that. Voila. What you say? I need a podcast. That's what my wife told me. My wife was like, you need a podcast. I don't think nobody want to listen to me, man. I'm just a dude from Fort Lauderdale, Florida, man. I don't think nobody want to hear nothing I got to say. I just like running my mouth. Speaking of running my mouth, I was talking to my son. I said something about like talking or running my mouth with people. I said, sometimes I just like to talk to people. This joke gonna look at me talking sometimes. And I just stopped and looked at him, and then my wife go look at me talking. I was thinking the same thing. Talking about sometimes, you know. Hey man, I appreciate y'all, man. If you're gonna trade, please trade safe. If you're not gonna trade, please take copious notes. Again, hopefully I was able to share something. Hopefully I was able to share some insight to my own personal trading setup, my own personal trading styles. This week has been really lackluster for me as far as trying to take trades. I did take 2 trades like throughout the nighttime. One, I figured out I was in a bad trade. One, I was trying to record it, but the computer kept going to sleep. But I really didn't. It wasn't really an eventful week. I ain't fooling with you, Tradition. Hey man, I'll see y'all tonight at 6:30 for the price action recap. I appreciate y'all, man. Go.